In recent weeks, stories of mismanagement and fraud of multiple major trading platforms have invaded the air, and the crypto industry has been devastated. But blockchain-based innovations continue to advance, and their potential remains strong. With this, Coinbase has notably emerged as a stable and strong leader. Although there are billions of reasons why Coinbase is often misunderstood, a partnership with the smart contract platform Cardano is a one-of-a-kind opportunity. For this to come to fruition, some loopholes need to be filled up. 4 years ago, Coinbase revamped its policy on new token listing instead of suddenly adding new assets, a process that sent their valuations increasing along with rumors of inside trading. Back then, the company went public with its intention to explore the potential to list new assets to reduce the impact of a listing. As a matter of fact, the company stated, quote, "Adding new assets requires significant exploratory work from both a technical and compliance standpoint, and we cannot guarantee that all the assets we are evaluating will ultimately be listed for trading." According to Coinbase's CEO, the company could list millions of cryptocurrencies in the future. At that moment, Coinbase was targeting a glut of new tokens, some of which were fairly questionable as projects and operating with uncertain legal status. The tokenized future could see Coinbase host hundreds of tokens within years and even potentially millions. Coinbase expanding staking offerings to include Cardano ADA, which is one of the top 10 cryptocurrencies by market capitalization. Cardano was designed to be a next-gen evolution of Ethereum. It enables smart contracts to allow developers to build a wide range of decentralized finance apps, new crypto tokens, and more. With us heading into 2023, companies have begun looking to the new year and weighing their expectations for the rest of this year. For crypto companies like Coinbase, it includes development on important aspects of the company. In the recent report, Coinbase titled 2023 Crypto Market Outlook showed 3 major themes expected to take action in 2023. The US-based crypto exchange believes that with factors like stream tokenomics, robust ecosystems, and ample liquidity, investors will move towards digital assets of higher quality, such as Bitcoin and Ethereum. Coinbase added that the deleveraging that occurred in 2022 has severely diminished investors' appetite to accumulate altcoins, and a full recovery may take months. In addition, Coinbase's report mainly revolved around the current crypto market landscape. Although it has failed to specifically mention the Cardano network, it's focused on layer 1s and layer 2s, which according to the report was becoming much more competitive with time. The report explained that a lot of activity on the blockchains was swaying outside the established cyclical market trend, and each blockchain sees differences in usage and transaction growth not in tandem with one another. There is healthy user demand for solutions that address issues of scalability, speed, and/or transaction fees. But what is less obvious is whether this will become a winner-takes-it-all market, the report stated. It did not fail to mention the FTX collapse and how the event affected the liquidity in the market. Similarly, it also had an impact on how legislation around the market is being viewed, as well as the diminished trust in the market following the crypto exchange's implosion. However, Coinbase expects the aftermath of these events to provide a ripe environment for innovation to push the entire industry towards a more sustainable growth and less speculation. Coinbase has about $8 billion in market capitalization, while the value of Dogecoin, the cryptocurrency which was originally created as a joke in 2021, is topping the records with a value of $9 billion. This comparison may not necessarily reflect the intrinsic worth of those projects, but it may show you how a meme coin can outperform the shares of a significant US-based exchange amid a widely volatile market. Cardano ADA is currently suffering from the same fate. This simply implies that both entities involved in a partnership have tumbled from grace to grass. So is there still hope for this partnership? Coinbase's shares recently hit all-time lows, and this development was an unusual one, given that the S&P 500 and many other cryptocurrencies have started to gain momentum and value. Fear is starting to grip investors regarding the company's long-term prospects. If Coinbase can satisfy all of its long-term debt obligations, its bonds have substantial guaranteed upside. But bondholders would rather sell now than risk Coinbase defaulting later. There are a couple of things stoking fears for Coinbase, and one of them is, of course, the collapse of the FTX exchange. Investors fear that all cryptocurrency exchanges will eventually fall into a similar pattern, including Coinbase. It is fair to raise these kind of fears, but also premature to panic. The same narrative applies to Cardano ADA. However, Coinbase's refusal to include Cardano in its report raised many eyebrows and made people wonder whether the so-called partnership was real after all. After the report was released, the Cardano founder, Charles Hoskinson, felt that the company had overlooked one of the industry's most promising prospects, Cardano. Hoskinson tweeted his disappointment in Coinbase, stating that he expected better. Not a single mention of Cardano. Pretty low and pretty sad. I honestly expected better, he said. Various reactions to Hoskinson's tweets swept through Reddit. While a few supported the Cardano creator's view, a significant percentage of them mocked his approach and took a dig at the Cardano network. Quote, "Nobody owes you anything, Charles. You sure throw a lot of rocks for a guy that constantly cries about tribalism," a user commented. Another user commented, "I get his frustration. Coinbase lists so many shady projects, but drag their feet on solid projects like ADA and Ergo." The stake pool operator and project manager at Drip Drops, Rick McCracken, argued that the omission was not intentional after some Twitter users started some partial jokes about a grand conspiracy to suppress Cardano. However, the negative reactions were quite expected, given that Cardano has been attracting a plethora of disappointments and disdain. Recently, Charles Hoskinson reacted to an opinion piece, which was published by the crypto news outlet CoinDesk. According to the news, Cardano will become a zombie chain in 2023. CoinDesk described Cardano as a vaporware network that will lose its position as a top 10 blockchain, as speculative money bids the ecosystem farewell. It was noted that Cardano is riding off the hype from its early days and has not undergone any significant ecosystem development despite the innovation revolving around Web3. Quote, "In the current depth of the bear market, Ethereum is maintaining roughly $1 billion in volume every 24 hours. Compare that to Cardano's minus $1 million and EOS's minus $100,000 in daily volume." End quote. Following the negative report, a Cardano enthusiast with a Twitter username at Cardano Nudes asked Hoskinson if he read the CoinDesk report that upgraded the network from a ghost chain to a zombie chain. "Did you see at CoinDesk gave us an upgrade from ghost chain to zombie chain alongside EOS?" Responding to this article, Hoskinson stated that probably Cardano has become a zombie chain. From his perspective, the article was just a confirmation of his assertion that the crypto media hates Cardano ADA. He emphasized that Cardano has not received much support from crypto media outlets. This low support has contributed to the negative reports Cardano has received from news outlets like CoinDesk. It is also worth mentioning that critics consider Cardano as a ghost chain with little to no utility. In an attempt to prove the news reports wrong, Cardano has managed to record a major spike in the number of smart contracts deployed on the network. As reported by Crypto Basis, the number of smart contracts deployed on Cardano spiked by more than 300% year to date. The Cardano network has also undergone a series of upgrades to improve the blockchain's performance. Notably, in September, Cardano's development team, IOG, launched the Vassal hard fork on the mainnet. The hard fork was an upgrade that ushered in significant improvements, including faster block creation and enhancement to smart contract functionality, even though the sentiment about Cardano remained unchanged. Data still shows Cardano is still at the top of developer activity, even though the ADA coin price is not having the best of times. The developer activity is measured by the amount of work that is being done on the crypto's public GitHub repositories. Higher development activity is a sign of commitment from the devs on the project and can serve as an indication of the long-term potential of the coin. While Cardano has not performed that well in terms of price, it has been the king of developer activity for a while now. Plus, this developer trust could be a positive sign for ADA investors, and with time, it will reflect on the price. Cardano is down, but Coinbase is also down. To avoid this partnership being tagged as a connection between weaklings, both entities will need to level up and prove the negative narratives wrong. But of course, what are your thoughts on this? Let us have them in the comment section below. We'll see you in the next video, but before then, check out our other videos to find out how Cardano is living up to the dream of being the Ethereum killer. And as always, make sure to click on the subscribe and notification buttons.